Hey everyone, welcome back to Corporate Decoder. We're about to crack open AGENUS's latest financial report and see if their growth strategy is paying off or if it's a bit of a messy science experiment. To kick things off, AGENUS is a company that's trying to harness the power of our own immune systems to fight cancer and other diseases. Think of them as trying to become the ultimate immune system trainers for your body. They've been working on a bunch of different approaches, including special antibodies and cell therapies. Today we're diving into their financial results for the period ending June 30th, 2025 to see how that training program is going. Let's start with a look at their overall financial health, their balance sheet. As of June 30th, 2025, AGENUS had about $9.5 million in cash and cash equivalents. Now, that might sound like a lot, but compare that to the almost $40.5 million they had at the end of 2024, and you see a significant drop. This means they're spending money much faster than they're bringing it in, which is pretty common for companies in this stage of development, but definitely something to watch. Their total assets also decreased from over $26 million at the end of last year to around $18.5 million in cash and cash equivalents. Now, that might sound like a lot, but compare that to the almost 45 million they had at the end of 2024, and you see a significant drop. This means they're spending money much faster than they're bringing it in, which is pretty common for companies in this stage of development, but definitely something to watch. Their total assets also decreased from over $26 million at the end of last year to around $185 million now. Now let's talk about how much money they're making and spending. Their total revenues for the first 6 months of 2025 were about $49.8 million. That's a slight decrease from the over $51.5 million they reported for the same period in 2024. Looking closer at revenue, a big chunk of it, over $48 million, comes from something called non-cash royalty. Revenue related to the sale of future royalties. This is a bit of a complex financial arrangement where they've essentially sold the rights to future royalty payments. While it brings in money now, it's not traditional sales revenue that comes from selling their products directly. On the expense side, it's not surprising that a biotech company focused on research and development is spending a lot. Their research and development expenses were over $48 million for the first 6 months of 2025. That's down quite a bit from over $80 million in the same period last year. This decrease seems to be due to fewer third-party services and a reduction in headcount, which shows they're trying to cut costs where they can. General and administrative expenses also saw a slight decrease, which is good news for controlling overhead. Putting it all together, their net loss for the first 6 months of 2025 was about $56.4 million. That's a big improvement compared to the nearly $118.3 million loss in the first half of 2024, so they are losing money, but at a slower pace. The loss per share also improved, going from over $5.50 last year to about $2 this year. That's still a substantial loss, but the direction is positive. Now, let's dig into some of those more complex financial items, like this liability related to the sale of future royalties and milestones. Essentially, this represents money they received upfront in exchange for future payments. For the 6 months ending June 30th, 2025, this liability stood at around $312 million. A big part of this, over $28 million, is related to an agreement where they essentially sold the rights to receive royalties from GlaxoSmithKline or GSK on their vaccines. This means AGENUS gets paid now, but they have to account for that money as a liability that gets paid off over time as GSK's sales happen, and royalties are passed through, managing the cash flow from these deals after and exchange for future payments for the 6 months ending June 30th, 2020 agreement, where they essentially sold the rights to receive royalties from GlaxoSmithKline or GSK on their vaccines. This means AGENUS gets paid now, but they have to account for that money as a liability that gets paid off over time as $12 million, a big part through. They recognize that royalty income, but also relate. They also had a significant transaction in May 2024 with Ligand Pharmaceuticals. This was an agreement where AGENUS sold Ligand a percentage of future milestone payments and royalties from several of their existing collaborations. In exchange, AGENUS received $75 million. A portion of this, about $63.9 million, is also treated as a liability because AGENUS still has ongoing involvement in generating those future payments. This deal affects their future revenue streams and adds complexity to their financial reporting. Looking a bit further down, we see a line item called non-controlling interest. This represents represents the portion of ownership in some of their subsidiaries, like Miancare Therapeutics and Saponi QX, that AGENUS doesn't own. As of June 30th, 2025, this non-controlling interest was about $18.3 million. It's important because it tells us that while AGENUS controls these subsidiaries, they don't own 100% of them, and the profits or losses attributable to those outside owners are tracked separately. And speaking of Miang Therapeutics, there was a significant development after the reporting period. In July 2025, AGENUS's ownership of Miang dropped below 50%. This means they no longer have control over Miancare and will stop including Miang's financials in their own reports. This change will be reflected in their next financial filing and could signal a shift in AGENUS's strategy for that particular subsidiary. Scrolls for sale of subsidiary shares in private placements just a bit before that. In May 2024, Miancare itself secured $5.8 million in private financing. This shows that even though AGENUS is reducing its stake, Miang can still attract investment on its own, which is a positive sign for Miang's future prospects. Now, no corporate analysis is complete without looking at potential legal troubles. AGENUS is facing a couple of significant legal issues. There's a class action lawsuit alleging misleading statements about their key drug candidates botensilimab and balstilimab. They're also dealing with derivative lawsuits filed by shareholders against some of their directors and officers. On top of that, they've received a subpoena from the US Securities and Exchange Commission, or SEC, requesting records related to their product candidates and public disclosures. The company states they can't estimate any potential losses from these situations, which means the outcome is very uncertain. These are definitely risks that could impact their finances and reputation down the line. The company is being sued over claims that they made false or misleading statements about their drug candidates. This is a serious allegation that could have significant financial and reputational consequences if the plaintiffs are successful. The company is also facing derivative lawsuits from shareholders, which essentially means shareholders are suing the company's leadership on behalf of the company itself. These lawsuits are often related to mismanagement or breaches of fiduciary duty. And to round out the potential bad news section, it seems like the risk factors mentioned in their previous annual report haven't changed much. This means the same challenges and uncertainties they highlighted before are still very much present. For a growing biotech company, these risks often include things like the success of clinical trials, regulatory approvals, competition, and the ability to secure funding. So what's the bottom line here? AGENUS is making strides in reducing its losses, which is encouraging. However, the significant drop in cash reserves and the ongoing legal challenges are serious concerns. The complex financial arrangements around their royalty sales add layers of complication to understanding their true revenue picture. The upcoming Zydus transaction, which involves selling manufacturing assets and securing significant upfront cash, could provide a much-needed financial boost, but the ongoing uncertainty about funding and the serious legal and regulatory scrutiny they face mean that success is far from guaranteed. It's a company pushing the boundaries of science, but also navigating a very challenging financial and legal landscape. Alright, that's our breakdown of AGENUS's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.